Hello, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. It is Saturday, February 23rd, about 3 o'clock. And as usual, our normal starting place here is the S&P 500, SPX index. And we've had just week after week after week after week of up price action, which, to be honest with you, is starting to wear on me. Actually, this week right here and this week right here, we're down, but only slightly down. So, the question is, is this counter trend? And the answer is, I don't know. I mean, that's the real answer. There are certain internal measurements that indicate that this is a sucker's rally, but we have gone back through the 200-day moving average. We've retraced, I don't know, a huge portion of this, more than 62%. We're almost 100% retracement of this. Let's zoom in here real quick. So we were operating under the fact this is a 1-2-1-2, but notice that this high right here, we're almost there. I mean, we're basically at that high. I don't think it's made new highs, but it's right there. So this is 100% retracement of this move right here down. So that's not so good for a 1-2-1-2. So then the question, what is this? I mean, it's possible that this is this looks very ABC-ish. It's possible that we go to new highs from here. You can see here ABC. But the only thing that's got me even second guessing that, and again, you've heard me say it before, but the design of the market is to fool as many people as possible. That's just the way it works. So you always have to consider that whatever your forecast is, or whatever you're thinking, there's a possibility of it being wrong. That's just the nature of it. So, and of course, as this goes up here, the possibility of this being a 1-2-1-2, decreases. But there are certain sentiment indicators that, this whole, like if you were to look at volume, this is all weakening as this moves up. In fact, let's look at the maybe a better market to look at. Whoops, gosh, I hit the wrong button. Sorry about that. I always do that. Maybe a better market indicator would be to look at the Dow. So let's look at the Dow Jones Industrial Average real quick, because it does show volume. If I turn it on, I got to turn the volume on. Quick toggles. So there's the volume. And, oh, that's interesting. It's not showing. Maybe I need to, let's put up the daily volume. Let's do 2-year. Huh. That is very interesting. There's no volume data. Let's try the DIA. The DIA is heavily traded, so we can still look at this. But you can see, just look at the average. This is the, what is the daily? This is a 20-day moving average here, this blue line. So let's zoom in here. So what are we trying to point out here? What are we looking at? Well, what we're looking at is basically a general, from here where the low was, right here, to where we are now, the volume has been generally falling as price has been increasing. So this is just a type of divergence. So that's one thing. The other thing is there's something called the put. I'm just going to put P, call ratio. So the CBOE, it tracks this ratio between the number of put contracts that are created and the number of call contracts that are created. And this ratio tells us something about people's expectations about the direction of the market and how strong they feel about that direction and so on and so forth. And so the put-call ratio, just to kind of give you an idea, is where it was right now, today, is where it was in 2000 at the top of maybe the biggest stock mania that we've seen in our lifetime. So that's commonly referred to as the .com bust. And so that does not bode well for for kind of the internals, the information behind, like, what's happening with this price. How is this price being lifted? So things like narrowing of the market or put-call ratio or sentiment index all indicate something about the underlying strength of the current direction or the current move. And so that's a big one, the put-call ratio. And it's definitely not aligned with the direction of price. So that's what I would say about that. Hide stays, won't hide the volume. So, I don't know. I mean, to be honest with you, I'm feeling less confident about what's happening here, but at the same time, these sentiment indicators, most people don't look at them, most people don't know about them, and therefore, it fools a lot of people. One of the things that I think is interesting here that I want to point out, and you probably already see it, is a lot of times when the market breaks an important support level. So in this case, this trend line support was pretty important, and of course it broke it here and then kind of retested it and then broke it again and then retested it and then broke it again really hard. But we could be going back up here, for a retest. We could be making our way back up here to kind of test the underside of this channel, the lower line of this channel, and from there maybe we sell off. I don't know. Of course, it won't be a 1-2-1-2 because then we'll be above the 100% mark of the beginning of wave one. So we'll see. I mean, that's all you can do. To me, what I think is important to think about is, how did you feel right here, in your 401k? How did you feel on this series of days or this week? How did you feel right here? Okay. So your decision-making process for most people is on how they feel. So if they feel scared, they get out right here. And of course, then you miss all this, right? But what you want to ask yourself is, if I've stayed in, I've got all this, what if it goes back to here? How am I going to feel? Am I going to feel like, wow, I should have got out, I should have got out here? And if that's the case, then pick a place and get out. Pick a place. Maybe it's right through here, through all this support area, from say here to here, Maybe you say to yourself, if we can get above there and we can stay above there, then I'll stay in. But if we break back down into this box area, then I'll get out. Or if we break down into this box area and don't bounce, then I'll get out. Something like that. But it's important to have some sort of strategy, have some sort of something that you're going to do before you actually get there. That's really the message I want to leave with you. All right, so let's look at some of the other things that we've got in our watch list. Close that a little bit. So let's look at the 10-year yield. The 10-year yield, a lot of people are surprised that yields have come back down this low. But what I want to point out is, notice that they haven't made a new low. this is the old low. Well, let me zoom back out. This is the old low right here, and we haven't broken that low. Now we're still in a downtrend. You can kind of see here, maybe kind of in a descending triangle or some sort of consolidation pattern. What I would do is I would look for, if the 10-year busts out above here, it's probably going to be on some sort of declining market. And if this next move is a wave 3, in other words, if wave 3 started right here, in other words, this is 1 and this is some sort of 2. If this is 3 here, you can see interest rates go way, way, way higher. I certainly think this low is probably here to stay. I don't see this low being taken out, unless this whole thing is some sort of A, B, C, and then we roll over here. At this point, we roll over here and start coming down for a new A, B, C. In other words, the this makes a new low down into this area, and that's certainly possible. In fact, if the market sells off hard, that's not only possible, it's likely. So anyway, but just know that the move downs in the bond in the yield market it's just a lower probability type of trade or investment, or however you want to look at it. So keep that in mind. All right, let's go to something else here. Let's look at the 13-week Treasury, which hasn't changed a ton. We're still in this consolidation area, which we've been talking about, but it looks like it could be moderating some. Whoops, sorry about that. But clearly there's a consolidation zone here. And we would look for it to either break out to the upside or make its way down here and break out to the downside. I think everybody knows my feeling. My feeling is this is going to break out to the upside, and the Fed, even though they say they're not going to continue to raise rates, when that 10-year Treasury starts going up, they will be raising rates. There's no doubt in my mind. I just don't believe that they're going to let the rate market take off without them. It's a huge credibility. It's a huge shot to their credibility, and I just don't think they'll let that happen. All right, let's look over and look at Germany and some of these other countries real quick. Let's go back to a weekly. All right, here's Germany. One of the things you'll notice about these other markets is they haven't run up as aggressively as the U.S. market. And sorry about that. Keep hitting the wrong button first. So, they could be about done, or you might see them run up to this 200-day. And maybe be looking for a reversal here somewhere in this area around the 200-day or the 200-week moving average. The 200-day is more important than the 200-week, but people switch between daily and weekly charts all the time and leave their same studies on. So this line could provide a little bit of resistance. If not, this is the 50-day moving average, which I believe is like the 200-day, the 50-day moving average. But on this chart, it's a 50-week. I think the 50-week. No, that's a 10-week. Anyway, whatever. Just sometimes these lines can provide resistance as well. So keep an eye on that. So Germany had a big slide. The rally hasn't been nearly as strong as the U.S. market. And that's pretty much what you see on some of these others as well. For Japan, something's not. There we go. There's Japan. Same kind of thing. You can see here that we rallied down, or we ran down, and then the rally has been less than stellar on the way back up. Excuse me. United Kingdom, it's been a little stronger, more like the U.S. market. And this could be just a function of money going into, this could be a defensive move. So money's coming out of these quote unquote riskier markets, which I don't know that Japan and Germany are considered riskier markets, but it's certainly the UK and the US are considered more safe. So that's what I would say about that. All right. That's really all I want to see there. Let's switch over to the TOS charts and look at some of the issues there. First of all, look at the SPX. Why is that not working? Huh, interesting. Well, that's interesting. Guess I'll have to type these in manually. I'm not sure why it's not switching. Let me try put in all accounts. Not working. Okay. Well, not sure why that's not working, but we'll put it in manually. That's okay. So here's the SPX. See, same thing. I mean, I've got a lot more notes on there and stuff, but it's coming. Here's the trend line that we talked about. Could make its way up to there. Let's look at the euro. Euro US dollar. Looks like to me the euro is trying to make a move up. It's making, here it made a lower low, but it looks like it could be an ABC here, and it's lifting off here, and this low is higher than this low. Everybody see that? I don't know if that's immediately obvious. Let's zoom in a little bit. So here's an important low back here. In fact, this was the low on this swing down, and it ran up, pulled back to a higher low, but then sold off. So this looks like an ABC kind of a pullback, but then this low right here is higher than this low back here. So, and of course the market rallied from there. So this might be a good place to enter the euro to the upside, and I would keep an eye on it. I think this is going to be one of the better trades, going forward here in the next couple of years or so. So I would keep an eye on this. Let's we can look at the GBP US dollar. We've got a target up here, way up here at 148. Same thing, although it made a new low here, we might wait for this to pull back into this area and then maybe enter, but we got a pretty decent target up here. Let's look at oil /CL. Oil to me looks like it's, we've talked about this before, but if you go to a weekly, let's go to a weekly chart. Oil could be in some sort of consolidation where this is A and this is B, and maybe we're at a place where, this is just A, B, and C is going to come down here and into this triangle. So oil, that means oil is going to consolidate and go sideways for a while. If this is a triangle, that means we got A, B, C. So that's A, and then B, and then C, and then D, and then E, and then a lower low on oil. But it looks like, looks like oil might be trading sideways for a good long while. All right, what else can we look at? I don't have a lot in my list. I think I've deleted some stuff or something. Let's look at gold. Gold could also be in a consolidation. I've got it going here, but maybe it consolidates first before it goes there. In which case, we could be right at the point where the market could start selling off here. You notice that right there, and it's like this. So, if this is A, B, C, D, D, E, maybe E into here, and then a rally up in here to 1450, and then this whole thing would just be B. So A, B, C down. So gold could go quite a bit higher from here. It could first it might pull back into this 1260 area or so, 1250, 1260 area, and then rally up here to about 1475. But then ultimately, we think commodities in general are going lower to deal with the deflation that's on the horizon, and that's something we need to keep an eye on. All right, silver and gold are very, very similar. They more or less track one another. Sometimes one can get ahead of the other one, in which case gold looks like it's gotten ahead of silver, and so it could be that silver is in some other type of consolidation and may go sideways for a lot longer. Silver also there's traditionally a certain ratio between silver and gold, and it's like, I don't know, I forgot what it is, 20 to 1 or something like that, and we're way above that. So that could be creating some downward pressure on silver. In fact, it probably is. But ultimately, silver is going to go much, much higher, as will gold, and probably silver will outperform gold when it does go higher. So if you're going to hold one or the other, maybe silver's better to hold. I'm not sure, but that seems to be what I think, based on just what I've read and what I'm looking at. But who knows? That's maybe the probability, but there's no guarantees in any of this stuff. So, all right. Let's see. Is there anything interesting? I mean, we could look at some of the leaders real quick. Amazon. Amazon has sold off quite a bit here and rallied with the market, but not rallied up as dramatically. So, and it is at the 30-week moving average. Let's go to a daily here, just for grins, and see if there's anything. Yeah, so it's at the 200-day moving average right now. This purple line is the 200-day moving average. So, who knows? Amazon might be done right in here. Might be another down up sequence in Amazon. Let's look at Facebook. These are all have been leaders in the last run up to the highs. So Facebook also, gapped down, sold off pretty hard. It's had a pretty decent rally, but has failed right here at the 200-day moving average and rolled over. So let's look at what else has been in the news here recently. Oh, I don't know. I'm not sure. Let's look at GE. I'm curious to see where GE is just dying. It's a dying company. And clearly they've had, they're having problems. So I would stay clear of GE. We've got some sort of relief rally going on here, but this could easily roll over and go make lower lows. So I would stay away from that. I don't know. I would look at Twitter, but Twitter's really not a leader. I'm trying to think what are the other technology. Facebook, Amazon, Netflix, NFLX. For FANG, same thing, sold off hard, rallying. This does look like it's rallied as about as strong as the market. So Netflix still appears to be a decent investment. Although, I mean, look, if you owned it back here at, I don't know, $60, it's probably not unreasonable to have taken some money off the table once it hit 400. It's obvious now. It's everything. Hindsight's always 20/20. But I don't know. Google is the other part of the FANG. Sold off, rallying not quite as hard as the market. So, the financial stocks, JP Morgan, Bank of America. Bank of America's hitting new highs. That's pretty impressive. Morgan Stanley looks like it's not participating. So I don't know. There's it's kind of a mixed signal right now in the market, but I'm sitting on my hands. I'm not putting any new money to work. And if I see things going south, I may put some more money to work to the downside, as I think that's going to move a lot faster and can make a lot of money quickly, especially if you buy puts and stuff like that. Now, the thing with buying puts or call options or whatever is they can expire worthless. So make sure you know what you're doing there, and don't take too much risk. Don't lose too much. All right. All right, everybody, that is it for this week's Middle Class Investor. Thanks for coming in, and hope to talk to you next week. All right, bye-bye, everybody.